This is arguably one of the most important trading videos that you will watch in months. My name's D7 here at Grok Trade. Welcome to the weekend edition. Good through Sunday, August 23rd, 2015. And warning, warning, warning. This is a significant warning to each and every one of you that the markets have topped out and we will be dropping. We've been calling this for some time. On Friday, the S&P drops 3%, the Dow down 3.4%, the Nasdaq down 4.4%, Russell's down 1.3%, banks off by almost a full percent. And we have silver down, gold up 0.6%, the dollar down nearly a full percent, and a huge spike at 16% plus on the fear. On the VIX, which is the fear indicator, showing volatility. Now, gang, we are looking here at the SPDR ETF. I am using TradingView.com. TradingView.com is a free software you can use. If you click here on the little light bulb, you'll see these little dots. The little dots are sometimes triangles for me. The reason they're triangles because that's where I call bottoms. Here I called a bottom, that triangle, and we shot up. Here we shot up. Here we shot up. There's a sell signal right here. You see that? And then we dropped. And then I do another sell signal right here and crash and burn. Now, you can follow me here at TradingView. Go to TradingView.com, open up an account, go to the SPDR, look for dots. They won't be triangles, they're going to be circles, but look for these lows and look for my name, owner of Grok Trade. And you'll see my picture there. Or up here where I called to go short and we have crashed ever since, or right here at the most recent crash I called a short before it happened. You look for those, click on me, and you can follow me. You can follow me so you never miss out on one of my calls and you can benefit from those. I'm going to click back on this light bulb so those go away. Here we are looking at the S&P 500 and we're going to be going over a lot of charts. Weekly, monthly, we're looking at everything, so hold on to your hat. And by the end of this video, I'm going to give you some things that will help you. I want to help you. Listen, I lived through two major corrections and have lived to tell about it. One, technology bubble pop in 2000. I did not know what was coming when that happened. It was a blindsided drop. I had to navigate those waters and I learned to survive, and I did, and it made me a much better trader because of that. In 2007, I am on public record on YouTube with my videos calling for the market to drop. I was calling out a warning just like I'm doing today on this video. Many of you will watch this video many months and years going into the future here thinking, how did he know? And how I knew is by looking at technical analysis. That's how I called the 2008 market crash, and that's how I'm able to call what we're seeing now. All right. Here we're looking at the daily chart. We had a big symmetrical triangle. You can see that here. If I bring in more data, big triangle with the blue trend lines. Then we went into a smaller symmetrical triangle. We pinched. And for those who follow me on a day-to-day basis, which you should every day, do not miss a video. What you need to do is listen to me very closely, because I said when we coil, look for power. Look for this to be a major pop to the upside or a major drop to the downside. And I said look for major movement. Sure enough, boom, we dropped down below the 20-day moving average. We bust down below a trend line. We bust down below a support level coming across right here. And then we bust down below a major trend line coming across. And then the damage and the carnage continues down, boom, down. And here again, we close below another support level. In a matter of two sessions, we cleared out a plethora of areas. Look at this, support here, bounce. Support here, bounce. Here, no support. We cracked through it on huge volume. U.S. markets tumbled more than 5% this week as worries mounted over the state of the global economy. The economy is being used as the excuse of why we're dropping. Now, if the economy was good, this would have been a major pop. But the reason we made the move had to do with triangles, had to do with coiling, had to do with price action, pinching. That's why we moved like we did. It wasn't because of any catalyst that took place. It was because of technical analysis. That's why we have to learn technical analysis better than everybody else that we're trading against. So today alone on Friday, the Dow tanks 531 points. Anytime the markets drop 2%, or in this case 3%, or the NASDAQ dropping more than 4%, that is huge. That is extremely damaging. And if you guys remember, I've been calling warnings. When we started going in, we had this nice run. And we're going to talk about this, but this nice run. And then I started calling for these warnings. I said, man, guys, it's looking bad. It's looking bad. Some of you even started getting sick of my warnings. You were saying, man, Des, every time you call a warning, in the market just continues to climb higher. It did, but it did not climb at the same rate. So I was seeing big time warnings, and I wanted everybody to know about those. Sure enough, big crash on big volume. This is the diamonds on the Dow. We had a little triangle here, crash and burn, big drop, busting through all sorts of support. NASDAQ. Right here, we go into this rising wedge, very bearish. We drop. We found a level of support, but when we broke that, it broke this support, and it's off to the races to the downside. This is when I went short the market. As soon as that happened, no ifs, ands, or buts, get out of all long positions, or at least hedge. I actually still have some longs that have not stopped me out yet. I have trailing stops on those, and I'm watching them like a hawk, but I started loading up on short positions here. And if you look here at the Russells, very interesting daily chart. We go up, we crash. We actually broke this support a long time ago. What you will see in the markets here, is the Russells will lead the charge to the upside or the downside, and definitely the Russells led the markets to the downside here. So I'm going to remove these two red lines, but you'll see the triangle right here, a little pinch. We broke it, we come up, we test it, resistance, support again becomes resistance, and then we crash and burn. So on big volume, looking for a lot of downside potential here. The banks, check this out, head and shoulders, shoulder, head and shoulder, head and shoulders here. And then we have this trend line, support broken, now becomes resistance, and crash and burn. We do have an inverted hammer trend reversal pattern right now on the banks. I could see a bounce coming. It will be short-lived. Don't get too excited about the bounce, because that will just give us a great opportunity to buy a lot of short positions. Silver here, this is a daily chart on silver, very turbulent. Gold up and away. I happen to be holding gold right now, and gold's being very good to me. Gold is good. What we're going to do now is go into some weekly charts. You want to pay special attention to these dudes. This is the spider. We've been climbing. This is back 2013. I mean, we can bring in more data. I mean, this market has been climbing back here 2009, and we go higher 2010, 2011, 2013, 14, and then 15. But here is what is most interesting. This is a rolling over. Look at this. Resistance, and now the new trend line, resistance is here. We failed to hit this upper one. And then to this one, you can see the rolling over effect right here. The rolling over effect is something you'll hear me talk about quite a bit. The rolling over. Hey, the markets are rolling over, or the stock is rolling over. This is what I'm talking about when I say it. It rolls over. We had support broken. This broke the ice. I mean, we're beating our drum forever saying, watch out for this market. And then now, boom, to the downside on the spiders weekly chart. The diamond weekly chart had a big rising wedge. We love rising wedges and falling wedges. Drop, boom, to the downside. Really damaging here. The NASDAQ rising wedge, beautiful support broken. Just a huge crash. Look at this glorious candlestick. I mean, it's big. Russells here. For the first time, the Russells broke this wedge for the weekly chart. Look at this. Resistance, support, boom, it broke it this week. Look for this to be danger zone. Danger. Banks weekly chart. Look at this. We're still within a rising wedge. We have not broke down yet from this rising wedge. We still have support here. This is what's building the case for a choppy market to continue. I see a lot of big up days too. And if you remember back in the when I was warning you, I said when the market breaks down, you're going to not see 100-point down days. You're going to see 200-point down days. You're going to see 300-point down days. And you're going to see 500-point down days. Does anybody remember me saying that? If so, put it down in the comments. Leave a comment saying, I remember you saying that. And this is what we're seeing. Today on Friday, we're down 531 points. That is damaging. I mean, both the blue chip index and the S&P 500 posted their biggest one-day percentage drops since November of, get this, 2011. 2011 since we've seen this big of a drop. So, but because the banks have not yet broke support, the banks could allow for some big 200-point up days, even a 400-point up day. However, do not be confused by that. Those are great opportunities for us to look for shorts because the markets are broken. We are looking for nothing but downside potential. Wait till we get to the monthly charts here. Silver weekly chart has not broke out of the falling wedge yet. There's a lot of upside potential on silver. Gold here is almost ready to break out of a falling wedge. I love falling wedges. I make so much money off of these. When gold pops up, I see this drifting higher here. I see gold going higher. The dollar, check this out. Now this is big news. Up until Friday, this was still intact. We had what was called a bullish pennant on the weekly chart of the US dollar. However, on Friday, we closed lower than a trend line. Resistance, support broken on the US dollar. The dollar could get very weak and quickly. That should actually help the equities, the stocks out there. Here's the VIX. This is the VIX here. Now the VIX has a big falling wedge, huge volume on a breakout candlestick. It just crossed resistance. I'm looking for a lot of upside potential on the VIX. I'm holding VIX right now in a big way. I like inverse ETFs and ultra ETFs. Matter of fact, I'm going to help you at the end of this video. I'm going to give you some awesome tips to help you safeguard yourself from this bloodshed. I want to help you. Then you're going to be very appreciative of this. I'm going to go here and we're going to go to the monthly charts. Monthly charts. Again, this is TradingView. I don't get anything from TradingView, but check this out. The spiders monthly chart. This goes back to 2009. Each bar is 1 month. Look at this huge run. If I bring in data, I just want to put this into perspective how long this is. This goes back to the 90s. Look at the length of this and the length of this. This run in the 90s was bigger than the run that we had here 2003 going to 2008. That 5 years. Much bigger here than here, but nothing compared to this rally here. I mean 2009 all the way to 2015. Are you kidding me? That is a huge run anytime you're 6 years going straight up. So with that said, now I want you guys to hear me here. The reason I said we are selling this like nothing before, you have to sell this market, because this market is begging for a sizable pullback. It makes all the sense to me in the world for the spider to drop all the way down here below or right at 180. Or on the S&P, 1800. That is a big drop before it finds any sort of support. It could certainly go much lower than that. This could be a serious sell-off in the markets. Here's the Dow. Dow going higher, and actually failed to get a trend line on here. So I will quickly do this. And what I did was I went to this low. When I say low, I'm talking about the lowest close. Support, look at that, perfectly touches shadows. Matter of fact, down here in the corner, you can click high definition, or go full screen to watch this in great detail. Make sure you always do that. Look at this. The diamonds close for the weekly chart below a major trend line. Bad news. NASDAQ here. NASDAQ is just in all sorts of trouble. And if I were to take a trend line here, we would have this line, a lot of support right here. Now this other trend line would go up here, and it broke it. So we go up, broke this one, but we have this support coming up. But I don't see the 20-month moving average being much of a support, but it'd be interesting to see that. Here we are on the monthly chart looking at the Russells. This is the small caps, and really thought I had my lines on here already. And these small caps here are nasty. Look at this. Support, broken. Now it is below the 20-month moving average. Again, small caps leading the charge to the downside. I see it. I get it. I see it being very slippery, a big slope right down here to the downside. Banks here just starting to break down, have not broken any major support levels yet. But if you look at this, if I show you what we're dealing with here, you'll see it very easily. But we have a big rising wedge. This rising wedge is ominous. Look for the banks to break down. If the banks break down, there's no chance for the markets. The markets will crash and burn. Silver, nice falling wedge. Looks like it's going to rally. Gold, same thing. Looks like we're getting ready to see a rally here on the markets. Let me help you now. This is how I'm going to help you. I don't want you to get hurt out there in the markets. So this is me helping bring value to you. So first thing you're going to do is you're going to go to Grok Trade. Now first, let me say this. You need to build a foundation to learn how to trade. The best way to do that is to drive towards a mentorship with us. Let us handhold you and help you in trading. But you have to go through 101 courses first. We will pay for that for you. You don't have to pay for those courses. 201s, you do have to pay for. Once you go through those, you'll be ready for mentoring. We'll help you. But that's not how I'm going to help you today. Today, I'm going to have you go to the website, you go to hedging. I just added this. This is down here at the bottom. Hedging. Now, by the time you're watching this video, this could be moved somewhere else. Just look for our hedging course. It's Hedging Made Simple, or Teach Me to Hedge. But click on this. When you click on this, we're going to give you a page, and you can read about it. There's a testimonial somebody sent us. His name's Brian. It's $97, but here's a code. The code is help me, all lowercase, no space, help me. You can buy now. When you buy now, put help me in, and it knocks $97 down to, I think, $69. I mean, it's a big discount. So that's the first thing. You want to go there and do that. Now, the second thing to help you is this, is a website that I want to show you. And it's called Direction. And the website is this word, directioninvestments.com. directioninvestments.com, and then /ETFs, or you can just click on ETFs right here, and you're going to come up with this page. This is free. Here are what's called bear ETFs or inverse ETFs. These ETFs you can buy in a retirement account. If you buy them long, they will only go higher if the markets go lower. They are inverse. So they are what are called bear ETFs. What's an ETF? An exchange traded fund. Trust me, you want to be doing ETFs, not mutual funds. Mutual funds are a fleecing of Americans. Do not do mutual funds. There's too many fees built into them. Regardless if they're loaded, unloaded, the fees are built in. ETFs, much better. Get the ETFs, and once you do, go over here to the filter, click on bear. See this? Daily bear, and then daily bear 2 times. This means whatever. Let me do the 2 times. This is, you get 200% leverage here. So I could do it on the S&P 500. I can do it on anything right here, right? And if the markets go down 1 point, this goes up 2 points. So you get a lot of movement 2 times. But if you want to go 3 times, like grease lightning, go here, and these are 300%. Now these are both bull and bear, so you want to make sure you're looking at the ones that are minus 300. Those are the bear ones. That's how you make money in a bear market. All right, how else am I going to help you? So that's number 2. The other ways is we're going to not teach you how to fish in this case. We're just going to give you the fish. How you do that? Let's go over here to stock picks, and then we have statistical picks and stock picks v newsletter. Now, what makes us so special is we're one of the few places in the world that actually puts together a bear list based off of, in the V newsletter, based off of fundamentals. And those are very good on the bearish side. They're fundamentally very weak. And in statistical picks, those are stocks that are way too high for what they're worth, and they're due to drop. Both of these statistical picks, a little longer term holds. The stock picks V newsletter, a little faster term. Okay, so if you go to V newsletter here and you click on this, you get 2 weeks free. But you click on this. But let me show you this week's what we had. Obviously, this week we were only looking for bearish moves. Okay, so here is our list on the bearish right here. SNDK down 13%. 10% on NFX. These are all our calls on the bear list here. And you can see all the money you could have made being short that list. And if you can also go to the statistical picks, get 2 weeks free here also, a little longer term, very good stuff. So now I've given you 4 things that you can do immediately. 1 is when you go to the website, go down to hedging. 2, directioninvestments.com /ETFs. 3, go and pick out your stock picks. Statistical long-term, V newsletter, shorter term. And what you want to do is learn how to trade. How do you trade? How do you enter? Where do you enter? How do you protect yourself at the stop loss? How do you draw technical lines? How do you understand it? Take the 101 courses. That's free. Do that now. And the 201s. Get registered for that, and then become a student of ours for mentoring. This is where it is great. Matter of fact, we have individuals who are students of ours, and we're so proud of them. Matter of fact, if you go to Facebook, go to Grok Trade, you can pull up our stuff. How many followers do we have here? Over 6,000 now. people following us. And this just came in today. We had a video here, and this is a student of ours. He just says, I've been sitting on my hands with my 401k for a while, and my provider just told me that not being in any of their funds was a bad strategy. Sounded like another sign that we must be heading for a correction. And I love that. It's a student of ours that knew to be out of the markets, and he'd been sitting on his hands, so he has not incurred this big loss that others are doing. So very, very cool. And the bear, he is back, certainly. And we have another student on Twitter today. Might as well talk about our Twitter account. Here you go to twitter.com/Grok Trade, and we have 4,600 followers here at the time of this video. But we had a student of ours, Maximus Prime, says, Grok Trade, give me a shout out in the weekend video. Well, here is your shout out for a good call, and he did make a good call. And his call was this big rising wedge, and that was on the one of the charts that we were talking about. I believe this is the weekly chart on the Russell's rising wedge and it breaking down. I'm done. Share this video with a friend. Like the video if you like it, and certainly share it if you respect it. Make sure you subscribe to our YouTube. Take care.